Hey everybody, Chuck Barone here. It is Monday, April the 15th, 2024. Everybody's favorite day. It's tax day. Hope everybody got their taxes in on time. Um, what a crazy weekend, guys. I'm sure you guys are up to date. So we don't even need to wait till Monday for the crazy to start. Now it starts over the weekend too. There's no rest. It's crazy. Anyway, before I get rolling, let me take a half a second. Welcome everybody to the show. And as always, thank you guys for your support. It means the world to me, guys. I appreciate you guys tuning into this live show, watching the videos, hitting me up with your comments, all the stuff you guys have been doing. I can't tell you how much I appreciate it. Anyway, let me let's talk about these markets today. So we saw what happened over the weekend. We had this, was that a war? It was the craziest thing ever. So I'm going to talk about it in a little bit of depth later, but I never saw a war where it was like Iran launches the missiles and the drones or whatever, and everybody knows about it 2 hours before they're even going to hit Israel. Nothing really makes it to Israel. Iran feeling satisfied. I've never seen Israel not retaliate to anything like that. So it's going to be interesting to see how that goes now, where we go next. But what a weird war. It was like a TV show. Okay, here come the missiles. Now we're going to get the cameras in place and we're going to take a lot of film of, they're knocking all these missiles and drones out. What the hell kind of war is that where the media knows everything all about it before anything even happens? I never heard of that before, but I guess that's the new nature of war now. It happens over the weekend. We get some, big media for it. Everybody gets to watch it. I don't know, man. That's got to be the weirdest kind of bullshit war I ever saw. But anyway, the war spook in the markets, but even more spooky to the markets today were retail sales. The number coming in way higher than they thought it was going to be. Revising February's numbers way higher. Here we go, right? So the markets today not happy. This is really, I guess, another nail in the we're going to have a whole bunch of rate cut coffin. I mean, every day there's more nails going into that coffin. So the market's tanked today across the board. The Dow falls 248 points, now sitting at 37,735. The Nasdaq falls 290 points, now sitting at 15,885. The S&P, the broadest measure, falls 61 points, now sitting at 5,061. Crap numbers across the board for stocks. It's time to be, a little more cautious with our investments, guys. This market's going to correct. They have all these rate cuts priced in. We know that we're not getting as many as they have priced in. They're going to have to adjust that. Now, the good news is earnings are what's driving this market right now. And as long as companies keep earnings, it'll support this market a little bit. PEs are getting a little bit high now, though. We'll see. I think we might have a little bit of an adjustment coming. The trouble today was in the bond market. Bond market, did you see what happened today with the craziest thing, right? So the 10-year yield, which is really one of the big benchmarks of the treasuries, it's like that's the 10-year treasury is what mortgage rates are calculated off of and a whole bunch of other, outside of treasury rates, corporates and everything else are compared to 10-year treasuries. It spiked up 13 points today, now sitting at 4.63%. Ooh, that's not good. They were hoping to keep it below 4.5. If the 10-year gets near 5, Katie bar the door. Now, oddly, the 2-year also fell, but the yield coming up, but only coming up 4 basis points. So the big sell-off was in 10 years today. The 2-year yield now sitting at 4.93, so the inversion's narrowing. Now we're down to 30 basis points. Terrible numbers in the bond market. This bond market has been in a bear market for a long time right now. And I'm going to talk about it a little later here in the show. U.S. Treasuries, a big part of the problem with these yields is the U.S. government treasury, the government loading the bond market up with debt. They have to refi $8.9 trillion worth of debt is going to be maturing this year. So they got to roll that over in addition to all the new borrowing they're doing. This is going to end well. So they're flooding the bond market. They're basically shutting out everybody else in this debt market right now. And ultimately, as they hog more and more and more of it, you're going to see yield spike in corporates. You're going to see yield spiking everywhere else because they're going to have to compete with rate. Crazy ass times happening. The dollar today up strong, up another 20 basis points, now at 106.21 on the index. Wow, guys, it's up to, it was 104 and change. We were talking about maybe we'll get to 105. Boom, right through that. 106.21, dollar getting stronger. Precious metals today, do you guys see these numbers? Oh man, still sizzling hot now. Gold jumps $39.10. $39.10 for gold. Now sitting at $2,383 for an ounce of gold. Silver jumps 96 cents. Now sitting at $28.91 for an ounce of silver. I got to say, I told you guys silver was going to get hot. I know, and now it's only going to get hotter as gold gets more expensive. And as more and more working people get onto the idea they need to be buying precious metals right now, gold is going to be the target. It's going to go crazy. It's funny, we were just talking, wasn't that long ago, just a couple of weeks ago, we were talking about silver having trouble breaking and holding $25 an ounce. I was disappointed. I was telling you guys silver was going to have a big rally. I talked about resistance and those even numbers. I'm telling you right now the next target for silver is going to be freaking $30. So we're talking the target now is 20% higher than it was just a couple weeks ago. Wow, great time to be owning gold and silver, which I know a lot of you guys who watch the show do. I do. And it's a great time to be doing that and having that because you can really see the numbers going. Oil today comes down a little bit. Oh, I'm surprised. If I was a betting man today in these markets, I would have lost some money because I would have bet oil was going to go up today, especially with the Iran-Israel thing going. But it comes down 25 cents, $85.41 for a barrel of West Texas Intermediate. I'll talk about that today. They're talking about oil demand coming down for the next 18 months. So maybe we're going to get a little bit of a break on oil and gas prices. All right. Bitcoin today. You saw what happened over the weekend. As soon as the missiles started flying, Bitcoin started tanking down to $63,000 and change, falling another 371 today, finishing the day. Well, last I saw, never really finishes, 63,362. Still a great number, just not as nice as, they were threatening to go through and hold 70. Now they got to work their way back up there. I don't believe there's even the slightest doubt that they will. Now, of course, all of this goes for all of this, Kevin, off to Costco for a golden pizza. Don't forget to buy some silver while you're there too. But anyway, Bitcoin, guys, I'm telling you, if this Hong Kong ETF comes into existence, it's all over, man. It's already all over. You're going to see Bitcoin continue to rise as it becomes more and more mainstream. If China gets involved and they create an ETF for it, now it's easy for China money to get involved. I don't see, it's got a lot of momentum right now, right? All right, so as I do every Monday, let's talk about data we're going to get this week. It's going to be kind of a weird week this week. Today we get retail sales. We already know that one. I'm going to talk about that in depth here in a second. Empire Manufacturing, I haven't seen it, but I saw that I was seeing a little bit of it on CNBC. The numbers were surprisingly strong. Business inventories, I have not seen that report yet. I'll read that in the Wall Street Journal tomorrow morning. Tuesday, we'll get some real estate info. We'll get building permits and housing starts, which are both expected to be down. We'll get some manufacturing data. We'll get capacity utilization and industrial production, which are both expected to be up pretty strong. Go figure. Wednesday is a quiet day, no data, just earnings. Thursday, we'll get the usual jobless claims. We'll also get existing home sales, which are expected to be down. There is no existing homes for sale. And we'll get the Philly Fed survey. So Thursday is really, other than today, the only chance we have at market moving data coming in, because Friday is another quiet day with just earnings. So this week, maybe a little bit more of a quiet week for the markets, depending on what happens geopolitically. It seems like now we're moving away from the data we're going to get this week to what's going to happen on the world stage. We got all kind of crazy stuff going on. So it's going to be an interesting week, because what happens and what moves these markets is going to be a little bit of a surprise for everybody, right? So we'll be looking for that. Of course, we'll bring in you guys all the details. All right, so let's talk for a few minutes about retail sales today. Numbers just explodingly high. Retail sales come in 0.7% from last month, so retail up strong. The February numbers revised up to 0.9% jump in February, up the original number of 0.6. So they revised it. Boom, that's a pretty big revision there. So retail sales, super strong. Now I'm guessing that we get consumer credit reports coming out later this month. That won't be as pretty as these numbers, because consumer credit's going to go up. That's how everybody's buying all of this stuff, right? So fascinating stuff, though. Now this, guys, I think really final nail in the coffin for any kind of rate cut the first half of this year. It looks like, because do you really see like everything collapsing all at once? I got to see a reason why. So with this retail sales number, now we're talking, forget it on rate cuts for the first half of the year. The sales print, if you exclude cars and if you exclude gasoline, retail sales jumped 1% from last month. That is a colossal jump. Prospects for rate cut just keep getting hammered. It's not going to happen. Now the sales, overall economy is still good. Retail sales hot. Jobs keep going. The debt's going to go up with all of that, but none of this points to rate cuts. I've been telling you guys, the Fed isn't going to cut rates just because everybody wants them to. Okay, and I agree. Inflation played a part on these retail numbers jumping up, because these numbers are not adjusted for inflation. So people spending more money to get the same, I'm guessing they spent more money and are getting more too, just not as much more as they used to be able to get. But anyway, so retail sales are the story of the day. The estimate for the day, by the way, was 0.3%, so they really blew that away. They're saying these numbers could produce a 2.5% GDP growth the first quarter of the year for the U.S. They really believe the way the Fed has this number worked out, they believe the sweet spot, they don't want to get above 1.8% GDP growth. That's what they feel like the inflationary comes at. You guys know we've been above that number for a while now, for most of the last few quarters, right? Pawn shops and jewelry stores reporting record people coming in to sell gold and silver to pawn shops and record stores in record numbers. People have this stuff. They've been sitting on it. Now gold and silver at record highs. People have seen an opportunity to sell some of it, help them pay down credit cards, help them pay bills, whatever they're doing with the money. So people starting to sell gold. This is good. We want that churn. We want it, it can't all be one way. Now the markets are going to start moving. Gold and silver could be the start of a big time bull run. Treasuries, guys, I'm telling you, this treasury market's in deep doo-doo. The treasury is going to flood the markets with notes and bills and bonds. They're trying to keep it 10 years or less. The demand's not there. The last two auctions have been not so great. They're really worried that what happens if we have an auction where it's really, really bad, that'll cause rates to spike. They got to sell the bonds no matter what the rate is. People more reluctant to buy these bonds as more and more of them coming out. The guys, I said, they got a refi. Can you believe they got a refi? $9 trillion worth of bonds coming due just this year. And they're adding on around $1 trillion every 100 days. This is unsustainable nonsense, craziness, madness, and hopefully, the election, do you really see them talking about this? You think that's where Biden's going? You think that's where Trump's going? I seriously doubt it. But if we don't get this in order soon, guys, we're going to have a very, 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 very massive problem on our hands, right? More real estate trouble. Builders were in. More people canceling contracts. Stubborn mortgage rates refusing to come down. Killing me, guys. I'll tell you right now, it's crickets. It really is. And now we know rate cuts are going to be put off. So real estate going to endure another tough year this year. And now they're talking about oil demand. You see that one? The International Energy, whatever, talking about oil demand worldwide falling. Going to be down for the rest of this year and through most of next year. They're talking possible a little bit more demand third quarter 2025. Maybe all of us get a little bit of relief from these amazing gas prices we're paying right now. I hope it all works out that way. I've been telling you guys oil prices are too high. I really believe it wants to be 75, not 85. We're going to get back down there, guys. You'll see. Anyway, that's it for the day. A crazy Monday. Another week of madness coming. You can tell all this no data this week has me spooked because I'm like, okay, well, the thunder is going to come from somewhere. We shall see. Anyway, guys, that's it for the day. We're back tomorrow to bring you guys the news you need. Thank you, everybody who's here for the live with all the comments. We love you guys. I appreciate it. If you can, please hit the like button. It changes our algorithms around. It helps our video get out there in front of more people. We've been seeing more people watching the video. That excites me, guys. I appreciate your help with that. You guys hit me up I will be in the comments today. Look forward to talking to you, Kevin, Attila, and everybody else. Appreciate you guys. Back tomorrow. Till then, have a great day. Thanks.